Right, we're live. How you doing?
Good afternoon, Lucky, and good afternoon to all the listeners out there. Sorry if you can hear the actual road traffic behind me as well, because it's a bit busy in the West Midlands today. So, how you been doing, Lucky? Love those colours you're wearing. Are you a Man United fan or are you a Liverpool fan?
Well, actually, I've been playing hockey, so I've literally come out of a match and just nursing my injuries. Being 53 years old, I still keep on thinking I'm like a 20-year-old. But
Oh my God.
we played against Banbury today,
Okay.
and we drew 2-2. But it was a very close
Mm.
match. They had a lot of young players. I think the average age of their side must have been something like 14 or 15 or something. So average
Wow.
age of
Okay.
our side must have been in sort of like 50 or something. Yeah,
So you had a good little run around at your age then.
that's right. So age is yet but a number. So yeah, it was a good match. I think it's probably the best. I mean, I've got very low standard, but I think it's the best I've ever played. So the captain did say that I played really well, although I did actually let in the second goal. Literally, uh, I think I was just panicked and I didn't stop the ball from going in, and it wasn't really such a hard shot either. So I think I should have stopped that one. So I got they didn't really wrap my knuckles, but there we go. Naughty lucky. I need
Wow.
to sort of improve.
So any injuries to update?
Only just a very tight hamstring, which is I have to keep on hitting it every few minutes just to sort of soften it up a bit. But you used to be a football player, didn't you? And that
Yeah, I used to be, yeah, but obviously, again, age is playing a factor in my obviously injuries and everything else. So suffered a couple of knee ligament injuries, so I don't
nasty.
want to injure myself even further and be crippled in a wheelchair. So I'll avoid it now at my age now.
So
But yeah, going back now,
I
Lucky,
think one of
obviously,
the
go on.
users is saying afternoon, guys. So afternoon to everybody out there, whoever's listening
Good
and
afternoon,
watching.
guys. Right, look, it's a quick one, mate. Obviously, we have touched upon last week regards to properties being bought in this current market, and you came up with about I think 10 good valid points and what people should look out for. Uh, Now it's going to be the reversal of that question. Do you think, as a vendor or a potential investor that has got properties that will sell, is this a good market to sell in right now? I mean, bear in mind, we did discuss last week a bird in the hand is worth two in the bush. That same scenario. Now, if you flip it around for a seller's point of view, is it a good market to sell?
Okay, that's not a. It's a very sort of blanket type question, which but everybody's situation is different. So I think we've got to be very careful about what we say because we can't just make a blanket statement like saying sell everything, we're all going to die. Nor can we say um, keep everything. It's the market's really buoyant because that's not the case. So I think everything's going to be dependent on the situation of the circumstances of each person's portfolio or their financial circumstances. So just to keep it really simple, because we're going to be talking at startup. Somebody's got an investment portfolio and somebody's got quite a vast portfolio. There's three levels. Um, and because we're the alternative property business solutions community, the idea is that we're not really going to be telling you what you want to hear, because the idea is that we are alternative. So I'm not going to make VJ Sal type jokes about that because that could get a bit hairy, so to speak. So we'll keep his jokes out of it. But basically, number one, if you've got a very good income, you're a high earner, and your job is safe because you're working in an organization that's possibly benefiting from whatever's happened in COVID-19. You may be selling sanitizers. You might be the director of your sanitization company or PPE equipment. So if that's the case, you've got ample money or cash coming in, the advice for you would be very different because you've got a lot of cash to invest into projects. So the second type of person is going to be somebody who's got a few properties, and they're not quite clear whether they should actually keep them or sell them, but they're just ticking them over. And the third type of person could be somebody who's just starting off and they're thinking, okay, well, the property market's crashing now. I haven't got any properties, but should I be buying now or should I be selling now? So let's tackle all those three questions. So for somebody who's starting off, I think even though you've got a stamp duty discount, as long as you're buying a property that's got you've stress test everything and you know that it's going to get you a very good income, you're getting a very high yield, you're on a fixed rate for the next 10 years. So even if interest rates went up to 10, 15, 20%, they went to 16 or 18% in, I think, 1988. And if that happens again, then you're stuffed, aren't you? So the question is, so number one, I would say just make sure that you are on fixed rates. And if you're not, and the property prices fall below the debt amount, then you're going to be negative equity. And banks may be in a position to be able to force you to sell because you don't know what's around the corner. So if you're starting off, I'd be super cautious and I would develop a business plan, but you're more than welcome to put in anonymous deals into the group, and we're happy to sort of post them and asking people advice about what would be the best thing to do, because we've got an expert panel of people on there, including Adnan, including Barhan, including our legal department that do a lot of litigation with banks. So help is at hand if you're not sure. So that would be start off person. The second type of person that's going to be critical to this is going to be, sorry?
No, so just cut you off there, Lakhi, because I mean, there's an interesting thing you just said there about the finance element of it. Now, I know that we have on our books several sellers that are going through a financial crisis. And you just touched upon that there with the banks. So if they're highly geared properties, would those be ideal selling assets right now? Or would you sell them personally yourself, or would you advise people sell those highly geared assets in this market to avoid repossessions?
Now, so a lot of these things are actually comes down to the situation of the person. If you can somehow restructure those assets and put them into fixed rates, and you're able to do that, so even if interest rates went up, and the gearing you could still just about manage, then you may be able to get yourself out of a predicament. But the likelihood is that if they're already highly geared, I'm gonna say the chances of you trying to beat the market now in terms of getting finance are going to be very low. And I think I remember talking to you in March, April time at the beginning of COVID-19. Yeah. And we were telling anybody that was selling at the time that you better sell now, because you wait 6 months. If there's a second wave or there's a recession, then you've got no chance. Yeah, and anybody that you were talking to at that time, they because they hadn't seen what was happening, it hadn't played out that time. What's happened is a lot of those people have come back to us and said, "Oh yeah, you were right at that time." They haven't been so direct about it because nobody's pleased to know that we were right, because we weren't trying to be right. We were just trying to tell people what is the best thing to do in a tough market. And because we knew the direction the market would take. So I think your and my take on it at the time was 100% right. And I think the market is going to potentially fall by maybe 50 to 70% in certain parts of the country. Yeah.
Okay.
I think whatever's happening with the stamp duty is sort of sprucing it up. But London, I think, is probably about safe for the next 6 months to a year. But I can see a correction in London by maybe 20 to 50% in about a year from now, depending on what the government does. The government somehow miraculously, chucks a, couple, 10, 20 billion into the economy and tries to bail everybody out. I don't know where they're going to get the money from, because the money's pretty much dried up, as far as I can see. So the second type of thing is, if you're highly geared, the question is, it's a tough one, but I would actually look to sell. And if you've got a negative equity, we're happy to help you to actually get that debt written off with the bank, because that's our specialism. So technically, you shouldn't really have any problems, because we'll have that expertise to be able to help you out of that predicament.
Okay, good. So you're touching about the second point now of the sales.
Say again, sorry?
What's the second point? So the first point you covered now with the banks and obviously repossessions. What's the second point? Why should people sell in this market now?
Okay, the other reason for selling in the market is that if you've got a, let's just say, 500k property in like a, let's say, one bed flat in Ealing, let's just say your debt is 200,000. What you might find is that if you're trying to sell that £500,000 property now, you may still get a good price for it, because the stamp duty, people are still getting a very good deal on a £500,000 property. So you may, if you try to sell it, let's just say in January of this year, and you're trying to sell it for 550, you could probably put it up to the market again for 550 now. But you might find that because of stamp duty, you may, if you're lucky in London, you may still be able to achieve the same price because it's in London. So, and your mortgage is 200. So if you wanted to optimize your position, because we have said cash is king, then selling it now is the only time you'll ever achieve that price. Because believe me, you're not really going to be able to achieve that price a year from now, because I'm pretty certain that if it's worth, say, 500, 550 now, is not going to be worth that much for sure by June of next year. My guess is that it might be worth even about 400 or 350. So if you've got a good price now, you can take it, get the cash. You could probably buy back other assets at the same sort of time in June of next year. Now, the issue with doing that is that you may not be able to get the debt gearing anymore, because you've got the mortgage market that's fluent. So in this market, it's fairly fluent, but in that time, you might find that the lending market is not fluent either. So anybody who's got a lot of money lying around, not in assets, but liquid cash, is going to be picking up assets for, outside London, maybe 30, 40p in the pound. Okay. London, at best, maybe 50p, 40p, maybe 60p in the pound as an average. But I'm not saying this as a joke, but I'm pretty intuitive, and I because I've seen the last recession, and I see what's happening in property every day. I think you know that I'm on the money.
Yeah. But just like last time, Lakhi, and obviously you experienced the hardships of the last time when the market crashed. How long would you reckon this market will probably recorrect itself? Or is this a recorrection process taking place now, in your opinion?
What do you mean by
prices too high? Are the market prices too high with regards to the income people are earning? Or is it just each area, like for example, London is overly priced, You've got the Midlands, which is just about right. You got Northeast, which is, let's say, for example, very sort of affordable in many aspects. So, do you think the whole country is going to go for rectifying prices now, and that'll take a period of time?
Okay, I think it's quite simple. I think the whole country has got an artificial inflated interest in property because the stamp duty for about up to a year. So prices around below $500,000 are probably going to stay about the same as they were about pre-COVID up till about June. But any properties that are above $500,000 now, this is the critical part. So if you own a £2 million sort of property in heart of Chelsea, then that £2 million property, could be may only be worth 1.5 million now, because the bigger you are, the harder you're going to fall in this market, because you've got a lot more to lose. So it's a bit like buying a Rolls Royce. As soon as you buy it on day one, it's the Ghost, for example, the Rolls Royce. I actually managed to go for a little cruise in it a few days ago. That's worth $395 on day of purchase. What you might find is that a week later, once it's been sold or bought or purchased by somebody, the price may even fall by about 20,000-30,000, because they may not hold their value. As soon as it's been sold, as soon as it gets on the road. So property is going to be quite similar. Anything that's quite high value, they're going to have a bigger depreciation, because stamp duty above $500,000 is still prevalent. It's still there. So my guess is that the bigger properties are going to definitely tumble in price. The smaller ones below $500,000, obviously, because of stamp duty, there's an artificial bubble there, which will probably sustain them, but it won't necessarily mean that there's a massive fall in the prices. But there will definitely be a fall in prices after June, unless the government decides to extend the stamp duty holiday.
But then surely, I mean, you just mentioned right now, you just gave an example of a very prestigious high net worth car. Now, with properties, they don't depreciate. There's always going to be, let's say, a fluctuation. Yes, they'll drop to a certain level, but they'll always increase. So would you then advise in that circumstances to keep hold of people's stock of properties or portfolios?
Well, this all comes down to more of it's quite a detailed question, actually. So if you've got about 10 million cash sitting in various bank accounts internationally, you're high net, and if you've got a couple of properties you bought in England that they're worth a couple of million, and you just want to make sure that you don't lose money on them, you probably better to actually sell them, so that you can optimize them at the top of the market, or close to the top of the market, because the top of the market is probably like February, March time. But if you actually keep them, just be aware that if they're worth 2 million each, a year from now they might be only worth about $1 million each. So they could fall it by 50%. So a £5 million property may only be worth about 2 to 3 million in about a year from now.
Okay, but then let's say, for example, now apparently what I've read, I've seen some articles that I see the overseas investors, because of this stamp duty that's been reduced for them as well, they're actively buying, and they're buying at these sort of market rates. Do you think that's a viable truth in the matter, or is it just going to be, let's say, a hearsay in stories?
I think a lot of international buyers, they are all worried about their whole economies flailing, and they may have a more of a depreciation in assets or their economies than they're doing so in the UK. So they may be investing into London because they see it as a safer, longer-term investment. So, but they'll all be looking to buy distressed properties now in the UK.
Yeah.
So they're not going to be looking to buy normal price. They'll be looking to buy distressed. So I think, but for them, it will be a safe haven. So, but the majority of the UK property market is not governed by international forces, because the majority of the property market is actually external to London. So a lot of them probably will invest into London because it's the safest place to invest. So you get a lot of Chinese investors coming in now into London, I think, because of a lot of uncertainty in China as well, and Russia.
Yep, 100%. I agree. And speaking of distressed properties, one of the properties that you managed to get hold of, which is a property of a week for us, is an unfinished development in East London, I believe, Lakhi.
Yeah, I mean, one of the things I think we're discussing is that every time we do the chat, the drive time, afternoon post-shopping sort of drive time now on a Saturday, is having a couple of deals that the deal of the week. So we can't really name the deal of the week because it's confidential, but basically we've got access to, is it 14 flats?
Yes, 14 flats with a freehold.
14 flats which are unfinished. I think they need about £1 million to I think 1.7 million pounds to spend on them to finish them. So we're direct to the receivers. So we are able to help facilitate that deal for anybody that's actually got deep pockets as a developer and wants access to that deal. So that's something we can most definitely help with. And I think you also mentioned that we've got another development project in Sheldon, in Birmingham, for 14 flats there as well.
Indeed, yep.
And I think we've already got the contract to sell those, which has got the developer that owns them is happy
again, 14 flats there.
Happy to actually give us a conditional sale for planning to actually get 12 more flats on as well. So I think that one sounds like quite an exciting project as well. But I mean, if anybody's interested in these projects, please DM Adnan Pasha. He's got access to all the property stock of about over 250 units now that he's managing the sales for across the whole country. Can you hear me? We cut out.
Brilliant. Thank you for the plug. But on that note, Lucky, I think we'll obviously wrap it up there. Because I mean, in terms of, can you hear me? Yeah, can you hear me now as well?
Yeah, I think you cut off for a second. That's fine.
Hello.
I can hear you fine. Yeah, it might be a bad reception.
Yes, I mean, so again, so just reflect back on, let's say, can you hear me now?
I can hear you fine. Yeah.
Possibly. But yeah, just to reflect back on obviously the selling point. So first point you're looking at, let's say, for example, are the mortgage, if they're highly geared. So you got to look at that aspect. What else are we looking at then? So we mentioned 2 points. What would be the third, in your opinion?
In terms of why they should sell?
Yep.
I
so
think
finance is covered. Legal is covered.
I think the reason you'd probably want to sell is that if you've got a lot of equity trapped in your assets and you've got a big portfolio, but you haven't got any cash, you may end up losing nearly all, 50%, worst case, 50, 60% of your cash sitting in equity in your assets. So if you sell now, at least you have ability to have cash in your hand, and whether you want to invest it back into property or not, because you've got to be able to go buy property at a better price than you've sold it at. So you need to sort of sit it out till June next year and then start developing a new portfolio at a discounted price. So it's basic business principles, really, I would say. I've also had somebody just writing into the group because I've set up the group for this live call-in. So somebody's asking, any properties in the Northwest?
Any properties in the Northwest? We had a couple of HMOs, but I believe they've been sold. We're waiting for, I think, a block to come available soon. I think it all depends, obviously, what kind of, if they can send us their requirements, we can certainly source those properties for them. So that's not going to be an issue.
I think it might be worth telling anybody who's actually looking to buy properties about what LPA properties offer. As considering you're heading up the LPA property side, can you tell us how does it work? Do they have to pay a fee? Is it a free service? What do you do for anybody that's looking to purchase properties?
Well, I mean, if they're looking to purchase a property from ourselves, Lakhi, it's quite a simple process. I mean, we are offering them a proper investment asset. So it could be a HMO, which has been discounted. There could be below market value properties. And for that purpose, to get hold of these properties that we've got in our books, there's a buyer's fee involved. So it will depend on property to property. But then again, it could be, let's say, an average 1% fees they got to pay as a buyer's fee. But again, that's dependent on the actual asset itself. Once they pay that as a reservation fee, then we can get them access to the property itself. They're going to have a look at it. If they want to proceed with it, then they can get the sales memorandum issued out to both solicitors. It's a simple, straightforward process. There's all agreements in place. And yeah, if you find anything on our site as well that's been developed right now, once it's finished, you'll have more of a scope of how we work and how we operate. So yeah, there's a lot going on behind the scenes, Lakhi. So yeah, don't mention too much right now and give away the secrets.
Perhaps one of the questions that the viewers probably need to know is really, why is it that Lakhi Singh, the property fixer, has access to a lot of properties for sale? Do you want to give us a quick brief on that, Adnan? Because you're obviously dealing with them on a day-to-day basis, or do you want to give a brief?
You can give a brief, but I mean, I'll give you a brief from my end. I think from your point of view, where you've got the majority of connections through social media, you're a well-known person within the industry with finance and with the property as well. Hence, I mean, if I gave you an example in regards to this East London development, you were the one who got it direct from the receivers. So I mean, that's the plus point that we have, that we can get assets directly given to us because we can deliver in getting them sold.
Well, just to add to those points, and I think to keep it really simple,
Hello?
we are UK-wide estate agents, obviously with the NAN.
I think Lucky's gone quiet there.
Can you hear me okay? Can you hear me all right? Can you hear me or not? I think it must be a bad reception area.
Yeah, loud and clear, Lucky.
Can you hear me okay?
Loud and clear.
Okay, good. All right. So a couple of important things. So the four key reasons why we've got access to a lot of good property deals is that we do a lot of bridging finance. We do a lot of negative equity write-offs. We do a lot of stop repossession. We do a lot of tax restructuring. So basically, because of that, we're the sort of go-to people. That's why we get a lot of good deals. I've also got somebody asking, is buying property risky at the minute, and would you be better taking on an incomplete development? And he's written, I can hear both of you. Okay, so that's good. So is buying property risky at the minute, and would you be better taking on an incomplete development? I'll give you my answer on that. I think, buying property at the moment is very risky. So if you don't have deep pockets and you don't know what you're doing, I wouldn't really buy assets unless you've got an understanding of what you're doing. You got to have, I would say, deep pockets and a facility, and I think you've got to be a bit more of a serious business person to understand what you're doing. Obviously, if you're just starting off, just trying to get one property under your belt, very little risk because you've got the equity to look after a couple of properties. It's not really going to be so much of an issue. And if there's a 10-year fix and you've got good yield coming in, so you can't go too wrong. So it's horses for courses, I would say.
Brilliant. Lucky, I think we should wrap it up there right now. So past our time. But thank you very much for your time, Lucky, again. The Lakhi Singh, the property fixer. My name is Adnan Pasha from LPA Properties. Once again, guys, thank you very much for your time, and probably see you tomorrow. Take care.
Take care, guys.